interest rates so high on the lump sum, does it make sense to just take an annuity from ConocoPhillips? And is the annuity insured?
Okay. Yeah. So backwards. The annuity is insured. So it's not insured through ConocoPhillips, but it's insured backed by the PBGC. So I don't know if somebody may recall back, 2000 when Delta went through their bankruptcy. It was an issue for a lot of the pilots because pilots were higher paid. Yes, their pension was still insured, but was insured to a limit. So let's say maybe they were getting, $7,000 a month a pension, but the insurance caps were maybe 4,000. So they still got their pension, but it got dropped from 7,000 to 4,000 because now the PBGC was taking care of it. That was 20 plus years ago. So interest rates have risen, inflation's risen, so the caps are a lot higher now. So for most people, they'll be covered. But if it is a concern, we can look into that and let you know. But as far as taking the annuity versus the lump sum, so that's one concern we see a lot of people as far as if something were to happen to ConocoPhillips. Another concern is, again, like I mentioned, an example I gave you, if I'm getting 4,000 or 5,000 a month for the rest of my life, that's it. So in 10, 20, 30 years, we've seen just in the last 2 years, the dollar doesn't stretch as far as it used to. So there's a concern there. There's also concern if you don't do the joint survivor or if you do a single life and you pass away sooner rather than later, then ConocoPhillips is really keeping the bulk of that. So a lot of times we'll see, even if the numbers are similar, people might take that lump sum, not necessarily because they want to manage it themselves, but maybe because they want to get their own personal annuity where there's more flexibility on the beneficiary options, where you might get a cash refund, or it might even pay out more. We saw kind of a sweet spot last year, where the interest rates were still low. So we had high lump sums and the interest rates were coming up and driving up annuity valuations outside of the company. So people were able to take that lump sum, capitalize on it, turn around and get a private annuity if they wanted to. And in some cases, they were getting, a couple $100 to $1,000 more a month by doing that. Plus they would have that cash refund option where if God forbid something happened to them, their beneficiaries capture that back as well. So that disparity has kind of shrunk. It's still potentially there. So there's a lot of different things to kind of look at. And that's why we recommend calling us and run that cash flow analysis. And even if you didn't think about it, we'll probably still present it so you have all the choices, because as fiduciaries, that's our role, to let you know the choices and then help hold your hand through that process.